Hello, my fellow seekers of financial wisdom. Thank you for joining me once again on the Investing Iguana. I'm Iggy, and today we're tackling a subject that's not just a headline grabber, but a real, pressing issue: is a global debt bomb on the verge of detonation? Look, I know the world of finance is filled with jargon and sensationalism, but this is different. We're discussing something that has the potential to touch every aspect of your financial life, from your hard-earned investments to your long-term retirement plans. This isn't just a topic for economists or Wall Street insiders, it's a conversation we all need to be a part of. So settle in, because we're about to embark on a journey that could fundamentally reshape your understanding of the financial world we live in. So, if you're as passionate about understanding the complexities of our financial world as I am, do me a favor, hit that like button and subscribe to the channel. Your support helps us keep producing content that empowers you to make informed financial decisions. Now, settle in, because we're about to embark on a journey that could fundamentally reshape your understanding of the financial world we live in. So, is the global debt bomb ready to explore? To understand this, we will need to start with the basics. Debt is a global phenomenon that has been steadily accumulating over the years. Countries around the world have been borrowing money at an alarming rate, resulting in the creation of a global debt bomb. This debt bomb refers to the immense amount of debt that has been amassed by governments, corporations, and individuals worldwide. There are several factors contributing to the growth of this debt bomb. One primary factor is the increase in government spending. As countries face economic challenges, such as recessions or natural disasters, governments often resort to borrowing money to fund necessary initiatives such as infrastructure development, social welfare programs, or military spending. Additionally, the expansion of credit and easy access to loans have fueled debt accumulation at the individual and corporate levels. Many individuals and businesses rely on credit to finance their day-to-day expenses or investments, often resulting in overextended credit. Furthermore, low interest rates set by central banks to stimulate economic growth have also encouraged borrowing. When interest rates are low, it becomes more attractive for individuals, corporations, and governments to borrow money since the cost of borrowing is relatively low. The consequences of this global debt bomb are concerning. The burden of debt repayment can become overwhelming for countries and individuals, leading to economic instability, financial crises, and potential defaults. Mounting debts can also hinder a country's ability to invest in long-term economic growth, as a significant portion of resources is directed towards servicing debt. So, what is the definition of a global debt bomb? Let me simplify this further for you. The global debt bomb represents the combination of all the debts owed by various entities across the world. It includes both public debt, which is the debt accumulated by governments, and private debt, which is the debt owed by individuals and businesses. As these debts continue to grow, they pose a significant risk to the stability of the global financial system. The global debt bomb is a pressing issue that needs to be addressed. The sheer magnitude of the debt levels is cause for concern as it surpasses the gross domestic product, GDP, of many countries. The debt burden is not only a problem for the debtor nations, but also for the global economy as a whole. If left unchecked, it could lead to a catastrophic financial collapse. If the global debt bomb were to explode, it would have far-reaching consequences. The financial world would be thrown into turmoil, leading to a severe economic recession or even a global depression. Countries heavily reliant on debt financing would be particularly vulnerable, risking a collapse of their economies. This could trigger a domino effect, with other nations also facing the risk of default. How did the global debt reach such alarming levels? Several factors have contributed to the rapid accumulation of global debt. One of the significant factors is governments' propensity to borrow money to fund their expenditures, such as infrastructure development, social programs, and military spending. Additionally, economic crises, such as the recent COVID-19 pandemic, have resulted in an increase in borrowing as countries struggle to stimulate their economies and provide relief to affected industries and individuals. Governments play a pivotal role in accumulating debt. In times of crisis or economic downturns, governments often resort to borrowing to finance their expenditures. While this may provide short-term relief, it contributes to the long-term accumulation of debt. The majority of low-income and developing countries face significant challenges in managing their debt levels as they struggle to generate sufficient revenue to meet their debt obligations. Economic crises have a profound impact on global debt levels. During recessions or financial downturns, governments may borrow extensively to stimulate their economies and prevent a collapse. However, this can lead to a vicious cycle of borrowing, as governments find themselves with mounting debt obligations and limited resources to repay them. This creates a dangerous situation where the global debt bomb is at the cusp of a crisis. So what are some examples of debt bombs that has occurred before? Here are some examples of debt bombs that have occurred before. The Latin American debt crisis of the 1980s. This crisis was caused by a combination of factors, including high oil prices, rising interest rates, and poor economic management. It led to defaults by many Latin American countries, which had borrowed heavily from foreign banks. This crisis had a ripple effect throughout the global economy and contributed to the recession of the early 1990s. The Japanese debt crisis of the 1990s. This crisis was caused by a combination of factors, including a collapse in the Japanese asset price bubble and poor economic management. It led to a long period of stagnation for the Japanese economy. The U.S. subprime mortgage crisis of 2008. This crisis was caused by a combination of factors, including risky lending practices by banks and the collapse of the U.S. housing market. It led to the global financial crisis of 2008 to 2009. The European sovereign debt crisis of 2010 to 2012. This crisis was caused by a combination of factors, including high debt levels and poor economic management in some European countries. It led to bailouts of Greece, Portugal, Ireland, and Spain. The Sri Lankan debt crisis of 2022. This crisis was caused by a combination of factors, including high debt levels, poor economic management, and the COVID-19 pandemic. It led to Sri Lanka defaulting on its foreign debt in May 2022. It is important to note that these are just a few examples, and there have been many other debt bombs throughout history. Debt bombs can be caused by a variety of factors, and they can have serious consequences for the global economy. You may then ask, if the global debt bomb is sustainable? The sustainability of the global debt bomb is a topic of great concern. As debt levels continue to rise, it raises questions about the ability of countries to service their debt obligations. If debt surpasses a country's GDP, it becomes increasingly challenging to maintain sustainability. Countries may resort to austerity measures, increased taxation, or borrowing more to service their debts, further exacerbating the problem. Several factors influence the sustainability of the global debt bomb. These include interest rates, economic growth rates, inflation, and the ability of countries to attract investors and creditors. High interest rates can make debt servicing more expensive, while low economic growth rates can limit a country's ability to generate sufficient revenue to repay its debts. Inflation also erodes the value of debt, making it more burdensome for debtors. Effective debt management is crucial in maintaining the sustainability of the global debt bomb. Countries need to develop sound fiscal policies that promote responsible borrowing and ensure transparency in government spending. Implementing measures to improve economic growth and attract investments can also contribute to debt sustainability. Additionally, international cooperation and support from financial institutions like the International Monetary Fund, IMF, are essential in assisting countries facing debt crises. What are the potential consequences of a debt bomb explosion? If the global debt bomb were to explode, it would have a severe impact on the global economy. Financial markets would experience significant turmoil, leading to a decline in investor confidence and a slowdown in economic activity. The resulting economic recession could lead to widespread job losses, reduced consumer spending, and a decline in business investment. A debt bomb explosion would not only affect the global economy but also have ripple effects on individual economies. Countries heavily reliant on foreign investments or borrowing may face difficulties in accessing capital, leading to a deterioration of their economic conditions. This could result in increased poverty rates, social unrest, and a decline in living standards. In the event of a global debt bomb explosion, international financial institutions like the IMF would play a crucial role in managing the fallout. These institutions can provide financial assistance, offer debt restructuring options, and help countries mitigate the negative effects of a debt crisis. Cooperation and coordination among nations and financial institutions are vital in minimizing the impact of a debt bomb explosion. Are there measures in place to prevent a debt bomb explosion? Debt restructuring is one potential solution to prevent a debt bomb explosion. It involves renegotiating the terms of existing debts, such as extending repayment periods or reducing interest rates, to make them more manageable for debtor nations. This can provide temporary relief and allow countries to regain control of their debt situations. The International Monetary Fund, or IMF, plays a vital role in debt management and preventing debt crises. It provides financial assistance, advice, and expertise to countries facing debt problems. The IMF's support helps countries implement necessary reforms, improve economic governance, and restore fiscal stability. To prevent a debt bomb explosion, addressing the global contagion risk is crucial. Financial markets are interconnected, and a crisis in one country can quickly spread to others. International cooperation, effective regulatory frameworks, and early intervention can help contain and manage the contagion risk, preventing a widespread debt crisis. Then, what can you do as an individual investor to prepare for a global debt bomb? As an individual investor, there are a few things you can do to prepare for a global debt bomb. Diversify your portfolio. This means investing in a variety of asset classes, such as stocks, bonds, and real estate. This will help to reduce your risk if one asset class performs poorly. Invest in defensive assets. Defensive assets are assets that tend to hold their value in times of economic turmoil. Examples of defensive assets include gold, silver, and treasury bonds. Reduce your debt. The less debt you have, the less vulnerable you will be to rising interest rates and economic downturns. Build up an emergency fund. An emergency fund is a savings account that you can use to cover unexpected expenses, such as a job loss or medical emergency. Aim to save enough money to cover at least 3 to 6 months of living expenses. Stay informed. Keep up with the latest economic news and trends so that you can make informed investment decisions. If you found this video helpful, please hit that like button. It really helps us to understand what kind of content you want to see more of. And don't forget to subscribe. Here at the Investing Iguana, we're dedicated to helping you navigate your financial journey with confidence and clarity. And guess what? There's plenty more where this came from. Stay tuned for our upcoming videos, where we'll tackle other interesting financial topics like the best investment strategies, understanding the stock market, and how to make your money work harder for you. As always, we're thrilled to have you as part of our Investing Iguana community. Your support helps us keep producing free content like this. Remember, every like, share, and subscribe goes a long way. Thanks for joining us today. Keep investing, keep growing, and we'll see you in the next video. Bye for now.